Good morning, guys. Welcome to this Friday, August 7th. And we got employment situation Friday, employment. So it's going to be the big news of the morning. Employment situation coming out in about half hour or 25 minutes. That's the only piece of news we have coming out this morning, but that's a big piece of news, and probably going to get a little bit crazy at the time. Right now, we're getting a little bit of action too. I mean, it's the market that's moving, a little big reaction right now. There's nothing on the news side of things, as far as I can tell. I mean, didn't hear anything on the news either about it, so we'll see. It could have been a headline somewhere. Uh, so getting started this morning. Again, that's going to set up for the employment situation. That's a news day kind of a day. So we have our default news day trade. Depending on what comes out and how the market reacts to that employment situation, if you get the big directional reaction, then we'll trade it as a news day trade. If not, if it's just volatile but not directional, then we'll go back and just fall back on it and on the analysis. And right now, looking at the analysis, the ES to get started. We had this big move out of the middle. We are definitely in stage two. In other words, we are pulling back from the high. We cut off the buying here at the 78.20s. And now we're pulling back, looking for a spot to cut off the selling. Well, that could have happened here at the 77.20s. So that would have been a full 100 points lower. We'll see if it keep extending to the downside today. Well, then we are still in stage two. If they do not, if they close somewhere in this range, then we're going to enter stage three and start building values. This is a great example of how the profile builds. And it market moves like this every time. It's just how the nature of the market moves. It doesn't matter what market you're looking at. Eventually, you're going to have an event, a piece of news, an external, some event. It's going to restart a move out of the middle, which you can see right here. That's your big move. Kicks it off, start trading higher. In this case, they run it higher. At one point, they're going to cut off the buying. In this case, it was at 78.20s. Then you get the reversal, and it's back down to find a spot which cuts off the selling. So after they cut off the buying, we enter stage two. Stage two is finding the lower end of the range, cuts off the selling, and then we end up in a value range, and that's where we start going back and forth, building value, coming to balance, and then we just repeat everything again. That's kind of how the whole thing works. So looking at the ES right now, looks like we have a distribution forming up here. But too early to say if we're going to be retracing further today. The employment situation could set us off to the upside, to the downside. It's just hard to say. We'll have to wait and see what the numbers are and what goes into the report. But I would say I would look for retest of this low, potentially lower still. We're in stage two. Until such time the trade up here above the back into the 77.60s, I would think is a good barometer. It starts trading above it, you can take off the short bias and go back pretty much range bound. So starting with a slight short bias just to see if they can retest that low, maybe take it lower. And if they can't do that, we'll be entering stage three by the end of the trading day. So that's pretty much the dynamic we are looking at. So looking to buy, initially looking to get short against the 77.60 and 77.70s for rotations down. Not more than that. 70.70s is the last one. If they trade up above that, we're just taking off any short buyers I may have. And on the way down, looking to buy against that 77.40s, 77.25s for rotations up. A little bit less aggressively on that one, since we're looking for that retest. So if they get down here, they're probably not going to be super aggressive on that on the 40s here, more like the 25s. So if they run down here to the 25s, 20s, start trying to run the stops below the obvious here, then that could be a nice buying opportunity. But you just have to wait for that failure to actually set in. I would not be stepping in front of it. It's a bit too, especially in stage two on the profile when we are looking for a spot to cut off the selling. So given that we get a non-directional, a volatile but not directional move as the market responds to the employment situation. So if it's volatile but not directional, we'll fall back on analysis, looking for that retest at the lows, looking to sell strength for rotations down. But if it's directional, they blow through the lows and just starts heading lower, or vice versa, start blows through the 70s and starts trading higher, then we'll do a potential new state trade. And what that is very it's kind of unique. It's a no-brainer. You have a decent, well, you can see here on the ES. If you have, assuming that this bar here is in the big fat bar, assuming it's like 5 times or 6 times that size, or width, not width, but the height of it. So the range of the bar is much larger. That would be more like a new state trade. So you have an average bar height here or range for so many ticks and so many points. And if the new state trades needs to be a lot bigger, like 8, 10 times bigger, and then you're looking for a little balance bar, the bar which closes within that prior bar. And when that bar forms, then you look for the direction out of that balance bar. So that's pretty much your new state trade. So you're basically looking for the direction to stall. You're looking for the market to come to a quick balance, and then you take the direction you come out of there. That could also be a retracement. Could be that the market pops, comes to balance, and retraces all the way back down, or it keeps going. So it could go a bunch of different ways, but that's the new state trade you're looking for. It requires you to have a big directional reaction, though. If you don't have that, then you don't have that kind of setup. So that's the ES. Looking at the Nasdaq, also a bit to the upside in the overnight. They're not in any move out of the middle by any means. They're pretty much in this trading range. So right now, Nasdaq is just right smack in this trading range. They've been testing the highs, they've been testing the lows. So we are back to the middle, and there we go. So you fold these together, and you can see that we are pretty much in the middle of this upper range. So the direction could go either way. I mean, if they take out the upper area, the 30,080s, I would lean in on the long side. If they start taking out the lows here, the 29,300s, I would start leaning in on the short side on the Nasdaq. In between that, it's traded as a range bound market. Look to fade the edges all the way up here to the 30,080s. Look to buy weakness all the way down here to the 29,290 to 300s. So initially, we are trading right here at the around about the 650s. So looking for shorts against 680, that would be aggressive. Next one up here would be 780s, 870s, 29, 940s, 990 to, oh, this is 30,000. So you have some levels here. So that would be the 690, 780s, 870s, 940s, up to the 30,000s for rotations down. And on the way down, looking to buy against the support areas at 580s, 520s, 450s, 370s, down to the 300s and below. But it's so you can see, I mean, you're just looking at for these levels to get hit, and then if you take out the level, you can certainly look at the directional move into the next level. You just have to have a little bit more momentum to do that. In other words, assuming they take out the lower support area here at the 460s, 450, 460s, they're going to probe it, and then they're going to continue taking it out. So you're looking for that second leg when not the first leg when they start probing it, trying to take it out. They're pulling back a little bit, and then you're looking for that extension and taking out the air. That's the time you want to join that trade if you want to hop on a directional move. But it's usually pretty sloppy at the time, or it moves very radical or very, very violently. So it's a lot harder to get on those than it sounds. Now if you get close to a level, don't look to join a trade right into the support area. So if you selling into support, buying into resistance is just usually the mistake people make, and that's why you use the F2. In other words, market starts trading higher, you can get up close to that 770s, and you promptly buy into it. You have to find yourself running into a mode of that prior distribution, and they stall and then reverse. And you wonder what happened. But that's you get caught in that when you trade on the F4 without paying attention to the F2. In other words, if you stare at this screen you'll get caught in those moves all day long. So it's once you pay attention to the F2 where you are in the bigger picture, then you look at, okay, it looks great for a trade, but I'm not going to take that trade because it's running into resistance. So that's the way you use these two charts together. So Nasdaq, we trade flat out range band right now, a lot of range to trade, but we are in the middle of a distribution. The ES is in the move out of the middle to the upside in stage two. Watch that lower edge, the 7725, that comes out. We may retrace further, but it all hinges on how that reaction to news is going to come out to be. All right, so those are that's the ES and the Nasdaq. Looking at the bonds is just it's to the downside. They have been slowly drifting, and as we talked, I mean, it's getting more and more clear that the demand for capital is driving up the yields a bit, and that is a lot of refinancing going on, a lot of debt financing going on, and that's driving up some of those yields. But they are down here building value right at this support there, so chances are we're going to see another leg lower on this guy. When this happens, they start building value like this at the lower support area. It just gets weaker and weaker, and then you'll find them take a leg lower here and start heading down. And that's going to spike the yields. The yield spike over 5%, the market's going to probably be not very happy about it. So the market is going to start reacting to this shortly. But right now, it's you can sense the market is a little bit desensitized to it. But that magical 5% on the bonds, yeah, that wouldn't go over too well. So starting off on the short side on the bonds, looking to sell strength at least to get started. Initially against that 1916 to 17. This one should be a little bit high. It should be and then up to the 0926s for rotations down. So only those two levels. I would probably take off the short bias already above that 0916 and look for more of a range bound market at that point. Maybe even a retracement back up here to the 26s. Because they were probing down here a bit. Depending how the market reacts to the employment situation, we may see it. If it's not a big directional move of any sort, we may have a shot at rotating back here to 26s. But again, just emphasizing, depending on the reaction to the news, you're going to either fall back on the analysis or maybe reevaluate that, because you just never know how the reaction is going to be. So, but if it's a non-directional move on the employment situation, I would look to sell strength 916 to 17, 26, 27, say for rotations back down again. On the crypto side of things, it's been moving a bit. It looks like it's a little bit of lift on the crypto side. You can see Bitcoin futures are trading higher. It's about 65. Ethereum about 1900. That's a good sign. Maybe the Clarity Act actually is going to get some action. I think that's what's driving that right now. I don't think it's not a lot more than that. That Clarity Act, going back and forth. It's the politics behind it is what's driving. It's what's going on there. It's just politics. We talked about it briefly yesterday, but it is a sad state of affairs. So they've been negotiating for a year and a change, and it's all about ethics and ethics and ethics and ethics. And you know what it's all about. You know what it's all about. That Clarity Act, I don't think the Senate's gonna go home. They have like 1 day left today, and then basically they usually go home for the break for like a month or something like that. They're gonna hold them over. We'll see if they can get the Clarity Act done. Wouldn't that be great? If the Clarity Act passes, well, there's some modification, but if it passes and they get some regulations around the cryptos, I think that whole thing can take off in a big way. The oil, the silver is to the upside, gold is to the upside, up to 4,300 now. Oil is trading down a little bit. They've been trading, they were down at 75, then they were back up to 78. So we'll see if that the talks now that comes to something happens there or not. But I'm not going to get my hopes up on those talks. You know, it's just that game back in chicken and mouse game going on there. Chicken. Did I say chicken and mouse? I'm talking about here. Anyway, the back and forth in that negotiation. It's just tune it out and let them deal with it, and then we'll see what happens. So, but that thing kicks in again. Oil prices pops a little bit. Probably is going to pop a little bit. But as you can tell, for each time this goes back and forth, the oil prices react less and less and less. So it's getting desensitized. Just tells you that that strait is really open. It's just a little bit tricky to get stuff through, and everyone is taking other alternative routes for stuff. So that's what's going to be happening on that side of the world. So back to the ES and the Nasdaq. And let's see how we react to the employment situation coming out in about 20 minutes or 20 minutes, 10 minutes. So about 10 minutes, we get the employment situation. And the initial reaction, if it's a directional move, big directional move, we can try a new state trade. If it's not, then we just fall back on the analysis. And that would be the ES looking for retesting that low, maybe take it lower. And for NASDAQ to just go flop around in the middle. And we have the outer ranges on the NASDAQ, and it's 29 to 280 to 90s up to the 30,080s. It's a pretty big range. We're in the middle of it. So let's see what happens. Alrighty, guys, we'll wrap it there. So good trading. This is a Friday, so don't do too much crazy stuff. Get ready for the weekend. Alrighty, guys. Good trading. I'll see you back at 11:30, and let's see what happens here on the employment situation. All right, guys, later.